Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only, and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. With only several days into 2023, the Australian dollar rebounded significantly during the Wednesday trading session. However, it remains contained by the key resistance level, which is seen at 68.45.55. News that Chinese authorities are discussing a partial lift to the ban on Australian coal imports ignited the move. However, the release of the minutes from the US Federal Reserve December 13-14 policy meeting confirmed a majority view that the interest rates may stay higher for longer, underpinning the need to get inflation under control. As investors turn their attention away from the minutes now, all eyes look to this Friday's crucial jobs report. The US Bureau of Labour Statistics reported that the total non-farm payrolls employment increased by 263,000 in November versus 284,000 jobs in October, while the forecast stands at 200,000 added for December. The unemployment rate is expected to hold around 3.7. Now, viewing the numbers that have recently come out, it is assessed that if we see a reading that is stronger than forecast, is usually generally supportive, bullish for the US dollar. However, a weaker than forecast reading is generally negative or bearish for the US dollar. So let's see what number is revealed on Friday. As I mentioned, it's forecasted around 200,000, but let's see if the market is a little bit stronger and therefore could see the outcome of some of these markets. Maybe seeing the Australian dollar retreat from the top side, because it is a key level, as I mentioned, at 68.45 to 55, and last time we saw this level contested did fail. The bearish outside range day, or the engulfing candle, has now been negated, but looking to the pullback currently, I see the support around 67.90 or around 67.65 and reassess from there. The dollar index, which measures the greenback strength against a basket of 6 major currencies, was a little bit to the softer side after surging over 1% on Wednesday. Currently holding around 103.90. The euro is actually holding relatively well after taking a very heavy downturn recently. Looking now towards the challenge that is seen around 106.40.45. A break there would give an extension back to that topside call, which is around 107.20, and reassess. Keep an eye on these technicals because they're not fully confirmed the last day and a half to the upside. So therefore, if this negative pattern remains, we might see some of the gains given back and therefore see the dollar recovering back above 104. Along with that, seeing the euro contest 105.80 and the base for the short term around 105.20.25. The dollar yen has confirmed that bullish hammer, and from there we can see overnight the strong rally cuts through the 132 level and now puts a trajectory towards the region somewhere around 134.70.90, where I've just outlined here. Likely to see some profit taking or supply return from this region, but nevertheless, with the candle confirmed, I feel that any pullback will be shallow around 131.45 and the base holding around 130.5. But overall, I expect to see the move through 132.40 up to 132.19, as I mentioned, up towards 134.70.90 and reassess from that top side. There was a little bit of a touch and go for the pound as it was challenging the level of 119.60, but was respected, and from the rebound we're seeing the market finding a little bit more coverage to the upside, and from the break of 120.55 expects additional momentum and maybe even strengthening the bullish bias towards a broader call to 122.35 to 124.5. Any pullback, as I mentioned, likely to be shallow with supports in at 120.30. Gold has reached its objective, which was at 1,854 to 56. From there, it's left me neutral. The reason behind that is it might be stops lingering just above this level, which could see an impulse up towards 1,873. But as I mentioned, I am neutral, and I like to just sit out for the moment, as the call has gone pretty much for the last 4.5 days. and reaching this objective, as I mentioned, at 1,854 to 56. I like to see if we get a pullback or if we get these stops. So sitting on the sideline just for the moment and just see how the market plays in the next 24 hours. Wrapping up with oil, well, the market has been very much a gloomy start for 2023 as the bearishness is now indented more than 9%. That is over 2 consecutive days. And therefore the market has now reached its objective of $73 a barrel after that bearish outside range day supported the downside move, and now looking possibly for an extension to $71 and reassess from there. I feel this might be a potential base, so we might see a little bit of profit taken from 71 and maybe see a short-term recovery. But for now, I still feel the bears are still navigating lower and therefore could see that challenge before any reversal. Well, that wraps it for today. Thank you very much for joining me. And as always, look out for the intraday report. I hope you enjoy the rest of the day.